Good evening and welcome to Bloomberg Quint Live. I'm Shraddha Babla, and over the next half an hour, we'll help you catch up with everything that you missed over the course of the day. Let's start with the headlines. Indian equity benchmarks declined as weak global cues weighed on markets. The Kolkata NCLT takes up 4 petitions in the Binani cement insolvency case. Will take up the remaining petitions on March 27th. SBI Chairman Rajneesh Kumar expects recovery to the tune of 40% of the total NPAs in the first list of stressed assets, believes that insolvency resolution process is looking fine by and large. US President Donald Trump may impose fresh sanctions and on more than 100 Chinese products as early as today. Mark Zuckerberg breaks his silence on the Cambridge Analytica data scandal, says Facebook takes responsibility for all the lapses. Indian equity benchmarks declined as investors wait for more clarity on Donald Trump's proposed tariff imposition on Chinese imports and its impact on the world economy. Both the indices ended with cuts of close to 0.5%. Navneet Saluja D'Souza is standing by to take us through all the market action through the day. Navneet, while it did look like a strong start to the day, it didn't end very well.
Well, that's been the template for the markets. On every pullback, we're seeing selling coming around those higher levels. And Nifty is finding very difficult to hold above the 200-day moving average. We crossed it yesterday, we crossed it today, but once again, there was selling seen. So Nifty closed with cuts of 40 points, and Sensex also closed with cuts of nearly 130 points. Bank Nifty, that was in focus, as today was the day for the Bank Nifty weekly options expiry. But Bank Nifty also closed the day with cuts of almost 0.5%, and dragging the index lower were the heavyweights like State Bank of India and ICICI. Nifty PSU banking index once again coming under pressure with cuts of 2%. It was not just about the benchmarks, but also the broader market succumbed to pressure, and the cuts there were actually deeper. The Nifty mid-cap index down 1%, and the small-cap index was down nearly 1.5%. Let me take you through the Nifty gainers. The upstream companies did well on back of Brent crude oil prices once again hovering around that mark of 70. So ONGC, Reliance were your top gainers. Besides this, you had a couple of other stocks which did well among the Nifty constituents. IndusInd Bank was the other one. Among the losing, the oil marketing companies, well, higher prices don't augur well for them. So stocks like BPCL and HPCL saw cuts of nearly between 3 to 4%. SBI and ICICI Bank, they dragged the index the most in today's session. Actually, not today, but it was the second day in a row they've been dragging Nifty lower. Let's just look at a couple of stocks which were in focus. Jindal Drilling was in focus after the company settled one of its arbitration case. So that was up 9%. HCC, according to DNA report, their subsidiary could be heading for bankruptcy, and that's Lavasa. The other F&O gainers, Nalco was very, very active on back of high alumina prices. Jubilant Foodworks, one of the top gainers on the F&O side, fresh long positions were seen. Stocks which went up yesterday saw some profit booking, and these are all your high beta stocks. Balrampur Chini as well as JP Associates, they were down nearly 6 to 7%. And Reliance Group stocks, when markets fall, high beta counters like Reliance Group stocks, Reliance Naval, Reliance Communication, Reliance Capital and Reliance Infra, all of them actually came under pressure in today's trade. And finally, you have some of the gainers. Second straight day of upper circuit for TRF. It was up 5% yesterday, and Aztec Life saw gains of nearly 6%. And finally, the participation today was just about fine. If you look at the cash segment, definitely the F&O turnover went up. Reason being, today was the Bank Nifty weekly options expiry, but most of the market participants have been highlighting that the activity now in the cash segment has been going down.
All right, thanks for all those details, Navneet. And in the primary markets, ICS Here Securities IPO opened for subscription today. The company is looking to raise about 4,017 crores through the IPO. This will allow parent ICICI Bank to part sell its stake in India's largest broking firm. The private bank will offload 24% stake in the 3-day offer. The price band for the IPO has been set at between 519 to 520 rupees a piece, valuing the company at 16,751 crores. Now, this will be the third issue from the ICICI Group in 3 years after the 6,000 crore ICICI Prudential Life Insurance and 5,700 crore rupees ICICI Lombard General Insurance IPOs. Earlier today, we caught up with Shilpa Kumar, the MD and CEO of ICS Here Securities, who's betting on the digital savings space. She also said that having a capital-light business model, the company is in no need of further capital. Listen into a slice of that conversation.
We are a capital-light business. We don't need much capital. Okay. So that's the first point, which makes us unique. And which also explains, the fact that we are high ROE. This year, ROE is 70%. So I'm saying that will give you a sense of the, returns on the business. That's the first thing. The second thing is, the opportunity I talked about right at the beginning. I would say that actually the focus on moving savings from physical to financial that we are seeing, and the last year I would say is evidence of this focus. It actually will permeate through every part of what we do. So if you look at the retail part of our business, it will permeate because, and you have seen the macro data on it, over the years the proportion of equity ADTO has gone up significantly. The mutual fund investments, if you look at it, they have gone up significantly. If you look at, the digital opportunity, you'll see that, mobile transactions have actually gone up by a factor of almost 285. So if you kind of look at the digital financial savings opportunity, I would say that it is a very important and large structural opportunity.
Now on to the latest on the Binani Cement insolvency case, and today the focus is squarely on the Kolkata NCLT, where at least 13 petitions have been lined up by different stakeholders in the case. The tribunal, which started hearing arguments from around 11 today, has heard 4 petitions. Pradipta Mukherjee of Bloomberg News joins us now on the phone line from Kolkata. Pradipta, what are you picking up?
Okay, so today's hearing was inconclusive and adjourned till 27th of March. The hearing went on for about 2.5 hours, so from 11 in the morning till about 1:30 in the afternoon. There are as many as 14 petitions today by 14 different applications. From Ultratech, from Binani and its associates, the RP and various lenders. Now, out of 14, the judge heard 4 petitions and said he will listen to these and the remaining 10 on 27th of March. The judge also directed the RP to file reply to all the other applications. And during today's hearing, one of the questions raised was why the RP took rupees 72.5 lakh for insurance. Insurance of what? So there are several arguments and questions being raised, some of which hopefully will be answered during the next hearing, which is on 27th March.
Thank you very much for all those details, Pradipta. Of course, we will continue to track developments on that case. But meanwhile, the government is said to be mulling more relaxed timeline for the entire insolvency process. Candace Zakaris gets us the details in this report.
We are in the process in India right now of resolving a number of large delinquent loan accounts. And this is really a focus for the government. However, as some of the really big assets start to make their way through the bankruptcy courts, what we're finding is that there is a pile-up of lawsuits from vendors, from owners, from bidders for these assets, contesting some of the decisions of the court-appointed insolvency professionals and also the committee of creditors. So the government is re-looking at the bankruptcy code and has instituted a panel to recommend ways to smooth out implementation of the code. So among the suggestions that the government has made, one of them is to re-look at the timeline or the deadline that was set for approval of any resolution plans. The deadline was 270 days, after which any company that was in the insolvency process would be forced into liquidation. So what we're hearing from sources now is that the government may consider easing that 270-day deadline on a case-by-case basis, and it will be at the discretion of the National Company Law Tribunal. Now, we have to wait, of course. These are ongoing discussions. We have to wait to see what eventually becomes amendments to the law. And we should hear about that quite quickly because, of course, there's a number of assets, stressed assets, that are currently in the bankruptcy process.
Chairman of SBI, Rajneesh Kumar, says that lenders are hopeful of recovering 40% on the non-performing assets listed in the first list of stressed assets. Speaking to Neeraj Shah of Bloomberg Quint as a part of Bloomberg Conversations, Rajneesh Kumar conceded that there are challenges in the IBC but believes that the resolution process is looking fine by and large.
There are assets in which there is a considerable interest from the potential bidders. And for example, in case of Bhushan Steel, where the State Bank of India is the lead bank, the recovery on the NPA value of the loan, I am not talking about the interest which is unapplied after the account became NPA, it is as high as 74%. So what I am finding that depending upon the prospect of the sector, quality of the physical assets which have been put by the outgoing promoters, the value differs, and the range is coming from 25% to almost 70%, 74, 75%, and Binani is of course an exception, but otherwise the range is from 25 to 75% in most of the cases. So on an average portfolio basis, the in the NCLT 1 list particularly, the recoveries are going to be on an average in excess of 40%.
Okay, so actually, if I combine both list 1 and list 2 of these accounts, I believe your exposure would be northwards of 75,000 crores. Would you have the same optimism about the quantum of recovery that could come in, Mr. Kumar?
No, list 2, the recoveries may be a bit lower because list 1 had some very good assets, and the smaller size loans, they don't fetch as much value as a large scale plant. Even for example, steel is the example where the Bhushan Steel, for example, or there is a considerable interest as far as SR Steel goes, but same cannot be said for a Monnet Ispat or a Electro Steel. So the recovery in each case is very different because it all depends upon what is the size of the plant, what are the products they are making, and what are the prospects going forward. So there are so many factors that it is very, very difficult to establish any benchmark that this is our benchmark and a minimum recovery or a maximum recovery of this much we can expect. So there are like the variation is huge as far as the asset sale goes under the IBC process.
Meanwhile, the Supreme Court today ordered that a status quo be maintained on debt-laden Reliance Communications sale of assets to Reliance Geo Infocom. The Apex Court's bench, comprising Justices A.K. Goel, R.F. Nariman and U.U. Lalit, refused to lift the stay ordered by the Bombay High Court on the asset sale. The top court will hear pleas from the consortium of banks and RCOM against the stay of assets sale by the High Court on April 6th. Shares of Reliance Communication ended 6% weaker today. And in another development, the government put out a draft defense policy which aims to increase the FDI to 74% for niche defense technology. Sajith Mangat is here with the details. Sajith, what's new in the policy?
That's right. The Ministry of Defence has put out the draft Defence Procurement Policy 2018, which is also commonly known as DPP 2018. What the policy envisages is to liberalize the foreign direct investment regime. Currently, there is a 49% automatic route, and you are allowed to take the foreigners are allowed to take the stake beyond 49 on a case-to-case basis, depending upon niche technologies. Now, the policy aims to liberalize that to automatic route, and for niche technologies up to 74%. Aside of that, it also looks at increasing the domestic value of defense production, which is currently around 56,000 crores. It says that by 2025, that is 2025, they plan to increase it to 1,70,000 crores. This would mean that a large portion of investments coming in to that, nearly 70,000 crores would have to come in, and a large portion would have to be contributed by the private sector. It also looks at exports which aren't much from India, and they are targeting an exports target of 35,000 crores by 2025. As part of its entire policy, it looks to bring in de-license many of those sectors where currently licensing is required. The policy aims to bring out a negative list, which will be a small list where licensing will be required, and the rest entire would be will be off licensing from that point of view. The policy also looks at cyberspace and artificial intelligence in a big way, because they feel that cyberspace is the fourth frontier as far as aside of the Army, Navy and Air Force, where warfare will be fought in the near future. So it wants to leverage on India's IT capabilities to tap into that sector. A lot of it is for defense PSUs, which many of them will be listing in the next few days. HAL, there is a boost for HAL because government is trying to augment capacities where, as far as light combat aircraft is concerned, advanced light helicopters and other flights and helicopters which HAL makes. Also, it wants to bring in many of the defense PSUs to the market as part of the divestment process.
All right. Thank you very much for those details, Sajid. Let's take or talk stock specific now. Now, after getting weighed down by regulatory woes for an extended period of time, there is some good news for Sun Pharma. The US drug regulator has approved Sun Pharma's filing for a psoriasis drug. After spending years and big money on this development, the drug approval comes as a much awaited boost. Darshan Mehta gets us all the details in this report.
The US FDA has approved the Tildra drug of Sun Pharma. It's used to treat psoriasis. So that's the news. As far as the timeline is concerned, what happened is September 2014, Sun bought this drug from Merck for $80 million. Then what happened is, and Merck had already done 2 phases of that. So when Sun bought it in May 2016, they announced positive data for the phase 3 trial. So that happened when Sun Pharma bought this over. They inserted almost $250 million in developing the drug. In October 2016, they presented the case study at Vienna in front of the European Academy of Dermatology. So that is there, and they've already spent in $320 million on this drug itself. 80 million was what they paid Merck, and the balance $250 million was the R&D. And finally, yesterday they got the US FDA approval for Tildra. So that's the entire timeline, what happened for the psoriasis drug. Now, as far as the deal with Merck is concerned, Merck will manufacture the drug. Sun Pharma will market the entire drug, and they will pay royalty to Merck because of this drug. Apart from the $80 million they have already paid in. Now, how big is this market? It's a big market. It's a $6 billion market for this drug. It's already crowded, but nevertheless, it's a $6 billion market growing at single digit. It's a less number in terms of growth, but remember, a single digit growth even on a $6 billion market is substantial. Now, what will happen? What are analysts factoring in? $200 to $350 million is the broad range that they are expecting from year 5. They will need 3 to 4 years to actually ramp up the revenues, and revenue growth can be much higher than this $200 to $350 million. Some analysts even peg it at $500 million if the growth rate is much higher. It's a high margin product. Margin will be in the tune of 80 to 85%, but analysts see Sun Pharma's market share less than 5% because it's already a very, very competitive market. Now, what works for Sun Pharma? The firstly is the fact that, you know, a low frequency of dosage is an advantage. It's not the most, in terms of efficacy, it's not the most superior product. Their growth in the specialty business will stem the issues that are cropping up as far as their generic business is concerned. The fourth point is the fact that it's a branded drug with high margins that will come out. And finally, it's a large market with significant amount of growth potential. What doesn't work for Sun Pharma is the fact that, you know, it's not the most, it's already late in a crowded market. Some of the other players have an advantage of almost 2 to 3 years on this drug, so they will have to catch up, and pricing has to be aggressive. They need to offer an attractive pricing to gain market share. And finally, if you're looking at it, it's not a superior product in terms of efficacy. So that's what they need to gain out, and they need at least 3 to 5 years to ramp up the product.
The arguments in the Aadhaar case continued today. Arpan Chaturvedi joins us on the phone line with updates on the Aadhaar case. Arpan, what is the latest on the arguments in the Apex Court?
That's right, sir. That was something unique happened today. We saw the CEO of the UIDAI, which is a Unique Identification Authority of India, the body that heads the Aadhaar project. Their CEO made a presentation in the Supreme Court. For the first time, we saw monitors being set up, and then he started his presentation on the technical and security aspects of Aadhaar, and he said that it is one of the most secure networks. It has the highest level of encryption, and he said, of course, that even for people who do not have complete biometrics, there are exceptions provided. There are other means to authenticate, basically trying to say that there is this whole argument that Aadhaar is leading to exclusion and starvation. That is wrong, because for people who do not have biometrics. Alternate means are provided. Apart from that, of course, he said that there has been no data leak. So these were some of the main arguments that he made. There were also questions raised on the blacklisting of operators. He said that, again, the Aadhaar CEO said that they have a zero tolerance policy for any wrongdoing. And because of that, of course, they have blacklisted 49,000 operators for various reasons: corruption, poor data quality, poor verifications, etc. So these were some of the points that the Aadhaar CEO made in his presentation today, and he is likely to continue tomorrow, 11:30 in the Supreme Court.
All right, Arpan, thanks for that. We will touch base with you again tomorrow at 11 again. But meanwhile, as far as Lok Sabha is concerned, it was another day of no work as proceedings were disrupted by protests by the AIADMK and TRS members yet again. The two notices of no confidence motion against the government were not taken up for the fourth day, as Speaker Sumitra Mahajan said she could not proceed forward unless the House was in order. Parliamentary Affairs Minister Anand Kumar said that the government was ready to answer questions on all issues, including banking scam and no confidence motion, provided they are taken up. The House has been witnessing disruptions every day since March 5th, when Parliamentary assembled for the budget session after recess. Meanwhile, Facebook CEO Mark Zuckerberg has finally broken the silence on the Cambridge Analytica data breach issue. The founder of the world's most popular social networking site, which was hacked into by the data analytics firm, has accepted responsibility and promised to put in enough safeguards to block further breaches. He says, and I quote, "We have a responsibility to protect your data, and if we can't, then we don't deserve to serve you." He also went on to add that other applications will now have very restricted data access to Facebook's domain to prevent any other kinds of abuse. Zuckerberg's post comes 2 days after The Observer and The Guardian put out detailed reports on how Cambridge Analytica used data from Facebook and other social media sites to influence the US presidential and Brexit elections. Back home, Indian politicians are also trying to accuse their rivals of hiring Cambridge Analytica, but nothing has been proven yet. Mark Zuckerberg added that Facebook is enhancing its security features to ensure the integrity of upcoming key elections in countries like India on its platform. Well, yesterday, the Federal Reserve stuck to script, hiked interest rates by 25 basis points through an unanimous vote. Jerome Powell, who was chairing the Federal Open Market Committee meeting, also projected steeper rate hikes in 2019 and 2020 as the US economy improves. But this year, policymakers said they'll stick to 3 increases. Bloomberg's Kathleen Hayes reports.
This Fed decision had something in it for just about everybody, because they did raise the key rate by a quarter point to 1.5%. That was fully expected. And the question was 3 rate hikes, that is, in 2018 or 4. And in fact, they did leave the rate hike consensus, the number of dots, indicating 3 hikes this year. But for 2019, they moved the consensus up to 3. For 2020, it's also up to 3. So there's considerably more rate hikes over the next couple of years than people were looking for. Now, let's take a look at the dots themselves. Again, the individual forecast from each Fed official based on their view of the economy and where rates should be as a result. What you now see at the far left is the view for 2018, which has 6 at 3 and 6 at 4, right? And it's a very, very close call, because there's still 2 people who think, no, we're not going to get even 3 hikes, and there's 1 person who is looking for even more than 4. I guess that would be 5, wouldn't it? But you can see if one of those dots from the bottom had moved up, or one of those, a couple more, you would have had this consensus for 4. So maybe that's why, even though they didn't move to 4, it does give people the sense that there's definitely a hawkish tilt here, and that the door is wide open for 4 rate hikes, depending on the data. Our Bloomberg economics team saying that they still are betting on 3 rate hikes, but they think this decision kind of satisfied their hawkish urges, but gives them a chance to wait and see how things turn out.
Powell sounded optimistic of the economic outlook for the United States, adding that the uptick in the job market is further validation of an uptick in the economy. Listen in to what he had to say.
Indeed, the economic outlook has strengthened in recent months. Several factors are supporting the outlook. Fiscal policy has become more stimulative. Ongoing job gains are boosting incomes and confidence. Foreign growth is on a firm trajectory, and overall financial conditions remain accommodative.
Meanwhile, the US-China trade war is set to intensify. President Donald Trump is now planning about $50 million worth of tariffs against China. The administration may target more than 100 different types of Chinese goods, according to Bloomberg sources. And the value of those tariffs would be based on the estimates of the damage caused by China's intellectual property theft. What are the implications of this new set of tariffs that could be announced as early as today? Bloomberg's Tom Orlik has this report.
I think we're moving from a light skirmish into a much more significant skirmish. At the same time, based on our calculations, if Donald Trump imposes tariffs which are worth $50 billion, that's equivalent to roughly a 10% tariff on all of China's exports to the United States. We think that would be damaging for China. We think it would knock a fraction of a percentage point off GDP, but that's not something which is going to be particularly troubling for China on a short-term time horizon. What will be more troubling for China would be if this move towards protectionism globally throws a spanner in the works of China's industrial policy. China's industrial policy is very substantially based on catching up to the technological leaders, catching up to the US, to Japan, Korea, Germany. If in a more protectionist world it becomes more difficult for foreign firms to locate their businesses in China, becomes more difficult for Chinese firms to buy technology overseas, what does that mean for China's industrial policy going forward? I think that's the more worrying question for Beijing.
Former U.S. Treasury Secretary Jack Lew calls the steel and aluminum tariffs risky as there's a real threat of retaliation. In an exclusive conversation with Bloomberg's Tom McKinsey in Beijing, Lew adds that the U.S. tax cut will not help the economy in the long run.
Conflict is not going to resolve a lot of those issues, so finding ways to keep pressure on but to constructively engage is important. I worry that when it is just left to come up to leaders without that, the risk of conflict is higher. And then when you do things like the tariff decision, it creates a lot of risk.
So the tariff decision is not the right approach in your view?
I don't think the steel tariffs are going to have a direct impact that's that big on China's economy just because they don't export that much steel to the United States. We have to see where the exemptions end up, what the net effect of the tariffs are. If China ends up being measured in its response, that would be a good thing. I regret that there's a question of whether or not the U.S. action is based in sound foundation. This tariff decision does not seem to me to be particularly well targeted.
Do you think these reports of $60 billion of annual tariffs on a whole range of products being imported from China, could that potentially be the trigger that pushes China to retaliate? How would you expect China to react to that?
Look, what I would tell China is to not make their own actions the cause of the conflict coming to the point that you're describing. China has done many things that they rightfully are being pressured on. This excess capacity is distorting global steel and aluminum markets.
Well, with that, it's a wrap on this show, but there's lots more coming through the day. Thanks for watching and stay tuned to Bloomberg Court.